Hello and welcome to this Tuesday edition of FreightWaves Now. I'm your host Anthony Smith and Micheal Vincent is back with us. He's going to give us a shipper update. But first, we're going to go to Zach Strickland with the carrier update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your carrier update presented by PowerFleet. I'm Zach Strickland, and we're going to watch our tender rejection rates fall yet again back down towards 25%. Now, we were up around 28% last week. Thanksgiving holiday, Thanksgiving break, we were kind of coming out of that period where you did not have a lot of drivers on the road. Now we're slowly settling back down to 25%, but I've got our baseline chart here to illustrate that we're still very high. That's a very high rejection rate. Capacity is still very tight. Anything in the green there is above that 25.13%. Anything in the red, below 25%. Now, it's been a while since we've seen rejection rates consistently under 25%, and that was all the way back before Labor Day. Now, we have dipped down a few different times during the month of October. There in September, we were down below it for a little bit, but we're staying elevated above that 25% threshold for a good bit. We do anticipate that this is going to be more of the most settled week or two that we'll see before the end of the year. Of course, as Christmas comes back around, we should see tender rejection rates start to increase again. How much, though, is a little bit of a mystery. There seems to be a little boundary, an imaginary boundary around this 25 to 28% tender rejection rate here in the last couple of months or so. But that being said, this is still an extremely tight freight market that we're working out of right now. If you're a carrier, spot rates still going to continue to be high. We are seeing a little bit of settling coming out of that Thanksgiving break. Totally normal, but still a lot of freight to move right now. Tender volumes, still same type of instance here where we're seeing these volumes. You can see that volumes, yeah, they did come down a little bit, but they're still extremely high. We're still at the highest level, one of the highest levels we've seen, even around Labor Day, and of course in November, and right there in Thanksgiving period, volumes still continue to be high. And keep in mind, these are total tender volumes. So we have seen tender rejection rates come down about 3 percentage points, while as tender volumes have remained relatively flat here over the last few days. So there's still a lot of freight moving through the system right now, and throughout the United States, we're seeing a lot of network imbalances as carriers struggle to keep up and maintain a lot of freight flows. Now, one thing that has changed here over the last little bit is the rail. The rails have started to reduce some of their surcharges coming off the West Coast and whatnot, but something that I like to look at every year around this time is what are the rail volumes doing, because that means there's a lot of potential freight still moving through the system. If shippers are using the rail right now, that means that they're searching for other options, because a lot of the freight that moves needs to get there very quickly. And if they're going to the rail out of season, that means that they are desperate. And that's what we're seeing right now, is we're seeing our outbound rail volumes, loaded rail volumes throughout the United States remaining elevated. If you can see this little green dotted line right here, we're well above most of our rail volumes for the United States for the entire year. And you can see down here in the green line, this is our domestic loaded rail volumes. Again, still elevated coming out of the Thanksgiving break. We traditionally see rail volumes really dip down in November and December, especially on the domestic side when you're talking about those 53-footers, which do tend to be a little bit more, they do get transloaded into other trucks. They get on chassis and move across the United States as well when they do need service to be a little bit quicker. International volumes taking a little bit of a dip. International, of course, really highly correlated with the maritime sector. So not a big shock there, but the domestic loaded's really keeping things up right now as volumes continue to be very high, freight demand extremely high, so carriers should have no issue with utilization right now. Weighted rejection index, things are settling after the holiday. A lot of red, a lot of orange on this map. Only a few little blue spots picking up right here. Kansas City, Missouri, been one of the most volatile markets here over the last several months. Tender rejection rates for tweener, 53% coming out of Kansas City, Missouri. Van rejection rates, middling, one of the only markets in the country right now to see tender rejection rates really hold on after the holiday. Reefer rejection rates, however, really dipping down. So van carriers, head on over to Kansas City, Missouri if you want to continue to get elevated spot market freight. And that'll do it for today's carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hi, welcome to your shipper update on this Tuesday morning. I'm Micheal Vincent. Let's jump into it. Looking at the outbound tender volumes that are going on across the country, I've got this year in blue, 2019 in orange, and 2018 in green. We are still very elevated at 15,780 coming out of the holiday week, and you would expect, looking at the seasonality, for this to drop off a little bit. Now, as a shipper, this doesn't mean that capacity is going to be loosening, as we expect these volumes to still stay quite elevated, obviously, over last year and stay in the previous 2 years, and stay up in that 15.7, maybe 16. It could actually increase a little bit with all the buying that is going on and the imports that we're watching come in across the ocean. Moving into the outbound tender rejects, as you see, we've come down a bit to 25.13. This is off of a 28 and quite elevated over the rest of the year and over the previous 2 years in the orange and green, 2019 in green, 2018 in orange. You can see that it is still quite elevated. And if you look at these trends here, here's your driver starting to come offline going into the Christmas and New Year's holiday. So with those volumes staying so high up there near 16 and the driver starting to come offline over the next few weeks, this little trough that we're in, we're about at the bottom of that trough, maybe through the rest of this week, and it's going to go back up and you're going to see capacity get even tighter. Now, coming down to 25.13, that's not exactly loose capacity. That's still 1 in 4 loads being rejected. Looking at the outbound tender reject and outbound tender volume 3D map here, outbound tender rejections in blue and volumes in the elevation. We look at several markets over here. If you look into the northeast here, Harrisburg, big distribution point. Atlanta, big distribution point, very elevated in volumes. Columbus, Ohio, coming way up, as well as Indiana and Chicago, very, very high. Now, the outbound tender rejects there are in the mid to low 20s, but its effect on the other markets is quite astounding. We'll look into those a little bit. There's some volatility lurking in the weeds over here in the Cleveland area that we'll get into here in a second. Looking at the van outbound tender rejects and volumes, we see a similar scenario here, especially in Harrisburg and Columbus, Ohio, and huge volumes coming out of Los Angeles as well still. Looking at rates, we see here I've got the outbound tender volumes in blue and the outbound tender rejections in this magenta here, and you see this huge cliff. Well, that cliff is from 28 to a 25, right? It's still 25% or 1 in 4 loads being rejected and upward pressure on your rates, and that's going to continue through the holidays. Breaking into the most volatile markets, I've taken a look at Los Angeles. The Los Angeles market, you see a decrease here in rejection volatility, but a moderate increase in head haul volatility, or the amount of outbound from inbound. And you see this gator mouth here. The green is your inbound tender volumes. The blue is your outbound tender volumes. Outbound tender volumes rising much faster than the inbound tender volumes, putting pressure on capacity. You're seeing the same thing in Cleveland, Ohio, except the opposite. Inbound is dropping while outbound is going up, causing even further pressure on that capacity. A dangerous situation there if you're a shipper. We have less capacity coming into that market and growing outbound. That's going to have a big pressure on your rates. Another big pressure on there is the Columbus market, where you see inbound flat and outbound very heavy, drawing capacity out of that Cleveland market. That's your shipper update. I'm Mike Vincent. Thanks for watching.
That's going to do for this Tuesday edition of FreightWaves Now. Thank you so much for tuning in. As always, you can check out all of our content on all your favorite streaming platforms, including Apple TV. Thanks so much for tuning in, and we'll see you on the next episode.